Good morning, everyone. My name is Riyad. Today is the 2nd of August, and we're going to present to you the technical outlook by Windsor Brokers. First of all, like usual, we would like to take a look at the economical calendar to check the previous data for last night and probably some data that's going to be affecting the market today. Last night, we've seen some important data on the Australian economy, and we've seen the retail sales rising to 1% from 0.0%. Also, their trade balance was in minus. We've seen it going up to plus to 0.01 billion, which also is going to show good effect on the Australian. For today, at 10:15, after a few minutes, we have on the Swiss economy the retail sales expected to be 2.8. We're going to monitor the 2.8 zone. At 11:30, we have the construction purchasing manager index on the sterling economy, and previous and expected numbers are 48.2. Also today we have the Spanish bonds auction, the 10 years auction. The interest rate expected is 6.4%, and the bid to cover ratio is 3.2%. Now, if the interest has after they finish the auction and they release the numbers, if the interest was higher than 6.5%, probably is going to show bad it's like bad signals on the Spanish economy. It's going to show more risk in those bonds, so people are requesting higher returns. Also, the bid to cover ratio, it's expected to be 3.2%. If this ratio came below this point, probably it's going to show that there isn't much liquidity in the market and not much banks are requesting to buy those bonds. At 2 o'clock, we have the official bank rate on the Great British economy, and we are expecting it to stay the same at 0.5%. And we have the asset purchase facility by the Central Bank of England, and the previous and expected amount is 375 billion. Also, we have the bank statement following the rate statement following the rate announcement. Also, on the euro today, we have some data about their interest rate. It's 75.75%, expected to be the same. And at 3:30 Cyprus time, we have the press conference for Mario Draghi, and probably we're going to hear from him some news about stimulus, about growth of the economy. So, of course, it's going to make some changes in the market. Finally, also 5:30, we have unemployment claims or jobless claims on the U.S. economy. Previous numbers are 353,000, expected to rise to 375,000, which is worse than the previous numbers. 5 o'clock, we have factory orders, and that's about it. There isn't much news at 5 o'clock. The most important news are the Spanish bond auctions, the English interest rate, and the statement, also the European interest rate and statement. So we're going to see probably a big move today. Of course, we've seen last night or during the evening, we've seen a big move during the FOMC, or the Federal Reserve statement. They kept the rates at what they are, but however, they were talking about the economy, saying that it has deaccelerated somewhat, so it's like slowing down a little bit. It's different than what they used to say before, that that it's going up in a like steady move, but this is something new. They also talked about the interest rates, not expected to do anything before late 2014. So probably that's why we saw a rise in Dow Jones, meaning that there isn't going to be any adding of the interest rate to the US dollar, which means that people are going to shift their investment from the dollar towards the stocks, which supported the Dow Jones. About also what they said, basically there isn't much comment. They're saying that the economy is not as good as it was, uh, decelerated somewhat, and they said that the economy recovery lost some momentum. So, but still, they're still talking about stimulus and stuff, but they didn't mention it in a direct way like they used to do before. Other than that, there isn't much news. The press conference today for Mario Draghi is going to be important. We're going to see if he's going to talk about any stimulus to the economy. Also, we've seen that the Asian shares have fell a little bit last night, and we've seen some European shares going higher today, probably because they're expected to have good signals from Mario Draghi about the economy and the boosting of the economy. Let's take a look at the euro against the dollar, and we've seen that it has dropped toward the 122.17. We were talking about previously the point of 122.25, which is the previous low that was hit on the 30th of July. We've seen a break below there. It reached the 17 and it went back up again. Currently, it's trying to test this area, which is the lowest area of the 31st during 11 and 12 o'clock in the noon time, Cyprus time. If this point is breaking, then we're going to test this area, which gave a higher rise to the euro, which is the area of 122.70. And finally, the area where it was trading before the big drop happened yesterday, which is the 122.85. After this point, it's a rise again towards the 123.50 and probably higher to 124.10. If not, if these points still maintain the market, probably we're going to see another drop lower towards the 121.70 area, which is the area which it was trading during the 25th of July, and it broke it during the 26th of July. Now a break there would open more downside. On the long run, we've seen that you can see that it's slightly in a downtrend, still in a downtrend. So probably any break higher than 24.10 or 24.30 is gonna signal a rise in the medium and the long-term trend. However, up till now, it's showing that the downtrend is going down. The area where it was trading during the past few days, probably it's gonna be broken. The last barrier is 121.70 or 65. If this point was broken, probably is gonna start to go lower towards the 118.70 zone, which is our target for the long term. Any break higher, now today we're only talking about long term now. Any break higher than this point is going to signal an uptrend. However, on the short term, we're still trading between previous lows of 122.25 or 20, and from the upside, those 2 points at 122.70 and 122.85 will open more to the upside. Looking at sterling against dollar, yesterday we were talking about this area of 155.50, that it was the area where it actually broke. We've seen a break below this point. It reached to 155.22 almost, and then reversing back up again. If we look at the chart, we've seen also slightly small points in this area, which is also I mean, points that was holding the sterling not to go higher until it jumped during the speech of Draghi. So we can actually use this point as a support level. However, it should be going lower now, and because of the oversold condition, as you can see, momentum is reaching 98. It's closer to the previous areas where it used to rise, as you can see in this area. So probably we're going to see a little bit of correction. It could be contained on this point of 155.82, which is the point where it dropped yesterday around 6 o'clock in the evening. If this area was broken, then probably it's going to go higher towards the previous low of the 31st and the 1st of August, where it was ranging higher than 156.20, and afterwards during yesterday in the afternoon it broke this area, and probably the support level is going to be a resistance level. A break here higher than the 56.20 would trigger that this break of the 155.50 is a false break, and that it could go high again towards the higher point of the barrier sides. If not, probably could go lower towards the previous lows at 154.58. There isn't much points in this area. We can look at small points around 155.20 and another one at 155.03, but probably these points are not that good. However, the previous area, it was ranging before 155.60 up to 70 something. It could be a good zone for buying. But in general, still the sterling for the past 2 months is trading between the 154 bottom side and the 157.70 upper side. So it's in a sideways trend on the medium term until it breaks one of those 2 points. Dollar Swiss, the same as the sterling. It also broke the highest level of the 30th of July, which is 98.23 or 25. The highest point was 33. Probably it should go lower, however, could be a false break and could reverse back a little bit. Currently, it's been reversing up to this area, which is the highest point of the 31st of July, which is 98.04 almost, or 98. A break here could trigger also this point of 97.92, which is almost 10 pips away. But the most important point is the 97.77, which is the area it actually broke when it jumped yesterday. So it could make a reversal or a small correction just to test these points and then go back again, or probably it's not going to go lower than this point or this point here. So we're going to monitor it a little bit to see what's going to happen during the 98.00 and 97.90 area, and see if it's going to reverse to test the 98.70 zone, or either to drop again lower towards the 96.90 zone after a break of 97.75 or 80. On the long run, just like the euro, it's still in an uptrend. Any break below this point, 96.78, which is the highest point reached on the 28th of June, and that was broken on the 5th of July, which is similar to the 124.10 area for the euro. Any break here would signal a reversal in the long term or a medium term trend. So probably it's going to break higher and continue going higher. Since it already broke in this area, we're going to wait for a small correction to support the Swiss the dollar Swiss, and then to go back up again towards the 98.65 or 70 zone. Dollar yen, we've seen it jumping higher yesterday during the FOMC statement, and it actually reached the highest level of 30th of July, which is the, as you can see, this area, and then it reversed back up again. Any correction or a reversal should be or could be contained on this point, the 78.30, where it actually broke, and finally on this point, which is the 78.25. So probably it could be a good buying opportunity with a small stop loss below these areas. And of course, we're going to see what's going to happen with the 78.55 zone. If it's going to be broken, then probably it's going to go up again and test the previous highs made on the 27th, and a break there would open 79.15 to the upside. To the downside, we need a break of the 77.95 and the 77.65 to see a continuation of the long-term downtrend, as you can see in this chart. Let's take a look at gold. All right, gold, we were talking yesterday about the two areas of 1,610, 1,620. We were saying that a break of any of those would either trigger more upside towards the 1,628, even 30 area, or a break below the 10 would trigger the 1,600 as a first point, and then 1,591 as a second point, which is the highest area of the 19th of July at 1 o'clock in the afternoon. And finally, last areas of 1,584 or 82 zone, where it actually started the rise. So we've seen a break on the 1,599 or the 1,600. And currently it's been testing this area where the said high we talked about on the 19th of July. So probably a break here would open a little bit downside towards the 54 area, this area here. And then it's gonna start to increase the acceleration downwards. If you go to the daily chart, we've seen that gold has been trading between 1,635 to 40 zone from the upside and 1,530 to 25 zone. So it actually reached the higher levels, almost the higher levels of the sideways trend, which has been trading in this trend for the past 3 months so far, and probably is going to go lower. If we look at gold, we can see that there is a little bit of a sideways, a little high sideways trend. The bottom side of this area is the 1,565 almost, which is almost the same points of the 23rd of July. So probably this is going to be the target if it continues to go lower. Now, let's take a look at the resistance level, because support and resistance you see are based on yesterday's analysis. Still today we have 1,591 as a support and second support at 84. Could be a slight one at 80. So basically the 84 to 80 zone is a good area to open the 1,565 zone. On the upside, if we go to the hourly chart, we've seen that gold tried to rise higher than 1,605 and a half yesterday after the drop, but didn't manage. So probably there's a lot of buying position. However, the important level is the 1,610. Any rise there it's the same point as yesterday, because the support level that triggered a lot of selling is going to be the resistance level that's going to show more selling if this point was reached. So it will also open the areas of 1619 probably, and the 10. So there you go. These are the points for gold as you can see them on the chart. This was the end of the webinar today. I hope you enjoyed it, and I hope to have good trading to everyone.